Today, October 8, 2025, the United States Supreme Court delivered a ruling that has sent shockwaves from Wall Street to Shanghai, reverberating through the corridors of power and the global economy alike. In a decision that legal scholars are already calling historic, the justices have upended years of trade policy with a single sweeping judgment. The court has overturned the sweeping global tariffs enacted by former President Donald Trump, tariffs that had redrawn the map of international commerce, ignited trade wars, and reshaped relationships between the world's largest economies. For years, these tariffs have been a source of tension, fueling uncertainty for businesses, governments, and consumers across the globe. This isn't just a legal technicality, it's a political and economic earthquake, challenging the very foundation of one of the most disruptive trade policies of the century. The financial markets reacted instantly, with stocks swinging wildly and investors scrambling to make sense of the new landscape. Headlines blared across the world, capturing the sense of upheaval and uncertainty. At the heart of the decision lies a fundamental question: how much power can a president wield alone, especially when it comes to shaping the nation's economic destiny on the world stage? The ruling forces a national reckoning over the limits of executive authority and whether a single leader should have the ability to reshape global trade with the stroke of a pen. The court ruled that the executive branch overstepped its bounds, using a decades-old law in ways Congress never intended. By stretching the limits of presidential power, the administration set a precedent that, according to the justices, threatened the balance of power between the branches of government. This decision reasserts the role of Congress in setting trade policy and draws a clear line in the sand for future presidents. As traders scramble to adjust their positions and politicians rush to frame the narrative, the world is left to grapple with the fallout. Uncertainty, opportunity, and chaos, all at once. For some, the ruling opens the door to new possibilities in global trade. For others, it raises fears of instability and economic disruption. The ripple effects will be felt in boardrooms, factories, and households around the world. In the coming days, we'll break down exactly what happened, what it means for the future of American leadership, and why this Supreme Court bombshell matters to you, no matter where you live or work. To understand today's ruling, we have to go back to 2018, when the Trump administration launched a radical shift in U.S. trade policy. Tariffs became the weapon of choice, targeting China, and soon ensnaring allies like Canada and the EU. The goal: protect American manufacturing and force better trade deals. The legal justification: a patchwork of old laws, most controversially the International Emergency Economic Powers Act of 1977. Critics argued this was executive overreach, using emergency powers for routine trade disputes. The tariffs sparked a global trade war, driving up costs for U.S. businesses and consumers and hitting farmers and manufacturers hard. The policy polarized the nation and set off years of legal battles. That conflict has now culminated in today's historic Supreme Court decision. The legal fight began almost immediately, with thousands of lawsuits challenging the president's authority to impose tariffs without Congress. The Constitution gives Congress, not the president, the power to regulate commerce and levy taxes. Lower courts found the use of emergency powers for broad tariffs was an overreach, setting the stage for a Supreme Court showdown. Today, the court sided with the challengers, establishing a major new precedent. A president cannot use emergency powers to bypass Congress and impose sweeping tariffs. This ruling reaffirms that in America, the power to tax and regulate trade belongs to Congress. The balance of power has shifted dramatically. The news sent global markets into a frenzy, with investors and analysts scrambling to make sense of the sudden shift. Within minutes, trading floors from New York to Tokyo were abuzz with speculation, as the implications of the decision rippled across continents. The shockwaves were immediate, and the world's financial centers braced for volatility. On Wall Street, stocks of companies previously hurt by tariffs soared, as investors anticipated a new era of opportunity. Meanwhile, domestic producers who'd benefited from protectionist policies saw their shares tumble, with uncertainty clouding their future prospects. The mood was a mix of euphoria and anxiety, as traders tried to predict which sectors would emerge as winners and losers. In Asia, markets reacted instantly. Chinese exporters, long at the center of the trade dispute, found themselves facing a dramatically altered landscape. Shipping companies and manufacturers scrambled to assess how the ruling would affect their bottom lines, while investors in Hong Kong, Shanghai, and Tokyo watch the numbers swing wildly. Across Europe, the decision was met with cautious optimism. European leaders welcomed the move as a chance to restore stability to global trade, but uncertainty loomed over the sudden change. Financial districts in London, Frankfurt, and Paris buzzed with debate about how the new rules would reshape the competitive landscape. Over $100 billion in tariff revenue is now in question, sending shockwaves through currency and commodity markets. The US dollar swung sharply as traders recalibrated their positions, and commodity prices, from soybeans to steel, fluctuated in response to the new uncertainty. Financial analysts worked overtime to interpret the fast-moving developments. In Washington, the political fallout was immediate. Trump allies warned that the ruling guts America's leverage on the world stage and opens the door to unfair competition from abroad. Heated debates erupted in Congress, with some lawmakers calling for new measures to protect American industries, while others urged a return to open markets. Business groups, meanwhile, hailed the decision as a victory for free enterprise and consumers. Industry leaders argued that removing tariffs would lower costs, boost innovation, and give consumers more choices. Retailers and importers expressed hope that the move would ease supply chain pressures and bring down prices at home. The market's chaos mirrored the deep political and economic divide, both in the United States and around the world. As politicians argued and traders reacted to sudden market drops, it became clear that the decision had exposed underlying tensions about globalization, national sovereignty, and the future of international commerce. Around the globe, news anchors broke into regular programming to cover the story, and millions watched as events unfolded in real time. In living rooms and boardrooms alike, people debated what the next moves might be, knowing that the world was entering uncharted territory. Allies saw opportunity in the shakeup, but also unpredictability. Diplomatic channels buzzed with urgent calls as governments sought to understand how the new trade environment would affect their economies and alliances. For many, the decision represented both a risk and a chance to redefine their place in the global order. The global trade order is being rewritten in real time, with new alliances forming and old certainties dissolving. As the dust settles, one thing is clear: the world is watching, and the consequences of this moment will shape international relations and economic policy for years to come. The Supreme Court's decision is a seismic moment in American politics. It's a direct rebuke of the executive-heavy approach that defined the Trump era, and it reshapes the presidential campaign overnight. Candidates must now rethink their trade policies. No more unilateral tariff threats. The ruling reignites debate over the separation of powers, with Congress reasserting its constitutional role. It could embolden lawmakers to reclaim more authority, shifting the balance in Washington. But it also deepens partisan divides over the judiciary's legitimacy. Internationally, the sudden reversal may help repair strained alliances, but leaves partners wary of future U.S. policy swings. The political fallout at home and abroad is just beginning. The story of power in America is being rewritten. The most immediate consequence? Refund chaos. As soon as the ruling came down, government agencies were thrown into disarray. Offices that were already stretched thin suddenly faced a tidal wave of refund requests, each one more urgent than the last. The phones rang off the hook, and inboxes overflowed with demands for answers. For many officials, it felt like the system was on the verge of collapse. The government may owe over $100 billion to businesses that paid unlawful tariffs since 2018. That's a staggering sum, enough to fund major federal programs or cover the annual budgets of entire states. Suddenly, companies that had been quietly absorbing costs or passing them on to consumers were lining up for their share of the windfall. Processing these refunds is a logistical nightmare. Years of transactions, thousands of companies, and a bureaucracy unprepared for the scale. Each claim must be verified, cross-checked, and approved, often requiring documentation that's buried deep in archives. The sheer volume of paperwork threatens to overwhelm even the most efficient agencies, and mistakes are almost inevitable. The economic impact is complex. On one hand, sudden cash infusions could boost business investment, allowing companies to expand, hire, or innovate. On the other, these massive payouts will drain federal revenues and widen the deficit, putting even more pressure on an already strained budget. Economists warn that the ripple effects could be felt for years, affecting everything from interest rates to public services. Companies must now decide whether to stick with new supply chains or revert to old ones, creating more uncertainty. Some firms invested heavily in alternative suppliers to avoid tariffs, while others simply paid the extra costs. Now, with refunds on the table, the calculus changes again. Should they double down on new relationships or return to familiar partners? The answer isn't clear, and every choice carries risk. The refund process could take years, with new litigation likely. Legal teams are already preparing for disputes over eligibility, amounts, and timing. Some companies may challenge the government's calculations, while others could face audits or investigations. The courts will be busy, and the uncertainty will drag on. For some, it's a windfall. For others, a bureaucratic headache. A few lucky firms will see their fortunes transformed overnight, while many more will be mired in red tape, delays, and frustration. The disparity will only add to the sense of chaos and unpredictability. The government faces a fiscal hit, just as finances are already strained. With deficits mounting and political battles over spending, this unexpected liability couldn't come at a worse time. Lawmakers and officials are scrambling to find solutions, but options are limited. The global flow of goods is about to shift, again, as companies and governments adjust to the new reality. Trade patterns will change, supply chains will be reconfigured, and international relationships will be tested. The world economy is entering another period of flux. The only certainty is disruption. In the months and years ahead, businesses, governments, and workers will all have to adapt to a landscape that's been fundamentally altered, one where the rules keep changing and stability is hard to find. Legal scholars and economists agree, this is a landmark decision. Experts warn the refund process could paralyze trade agencies and say clearer laws could have prevented the chaos. Constitutionally, the ruling is a powerful check on presidential power. Future presidents can't use national emergency as a catch-all for economic policy. The decision reaffirms the separation of powers and will be studied for years. Economists call it a necessary correction, even if disruptive in the short term. The Supreme Court has drawn a clear line. Congress, not the president, controls the nation's economic fate. The debate over executive power is far from over. This story is about real people, workers, farmers, business owners, and families. For some, tariffs saved jobs in struggling towns. For others, they meant higher costs and layoffs. Farmers were hit hard by retaliatory tariffs, losing key export markets. Consumers paid more for everything from appliances to clothing. The ruling may bring relief, but the damage for many is already done. The end of tariffs could lower prices, but not overnight. Domestic industries now face renewed competition and uncertainty. The human impact is the true legacy of this policy. Where do we go from here? The Supreme Court's decision has upended American trade policy. The Biden administration must now unwind the tariffs and manage the refund chaos, while seeking to reset global relationships. Congress faces a mandate to finally legislate on trade, balancing protection and global competition. Businesses and consumers must adapt to a new, uncertain landscape. The economic aftershocks will ripple for months, if not years. The story is far from over. This is the start of a new chapter in America's global role. Power, money, and the principles of government are all in play. The choices made now will shape the economy for a generation. Staying informed and engaged is more important than ever. The world is watching as America writes its next act.